Treasury Department launching crypto education initiative. The initiative centers around informing the public about the potential risks of investing in crypto. The U.S. Treasury Department's Financial Literacy Education Commission will launch an initiative focused on informing the public about the potential risks of investing in cryptocurrencies, a top official told Reuters in an interview. The educational materials and outreach push will include information about how cryptocurrencies work and how they differ from traditional payment formats, said Nellie Liang, Treasury Undersecretary for Domestic Finance. Liang said crypto could offer potential benefits, such as improving financial inclusion and cross-border payments. The initiative is meant to educate without trying to stamp out new technology and new innovation, Liang told Reuters. The Treasury Department's Education Department encompasses 20 different agencies, including the Securities and Exchange Commission, whose chairman, Gary Gensler, has previously referred to crypto as the Wild West. The Treasury Department's move comes as the Biden administration reportedly plans to issue an executive order this week detailing the government's strategy for setting policies for and regulating cryptocurrencies. Senator Elizabeth Warren drafts bill to target use of crypto by sanctioned Russians. Senator Elizabeth Warren, DMA, is preparing a bill in response to fears that Russian nationals may be using cryptocurrency to evade sanctions. The draft legislation, first reported by NBC, would require banks and other financial institutions to both identify customers and transfers to private wallets, and regularly report information to the Treasury Department. But crypto firms insist that there's no evidence of sanctions evasion on their exchanges. Criminals can use cryptocurrency to move money in the shadows, opening a door for Putin and his cronies to evade economic sanctions, Warren wrote in a tweet Tuesday afternoon. I want answers from its U.S. Treasury on how they'll ensure crypto doesn't undermine our response to Russia's invasion of Ukraine. While the bill's text hasn't been released yet, NBC reports that one of the provisions is identical to a proposed Treasury Department rule that requires banks to regularly identify suspicious transactions that it believes is linked to sanctions evasion. If passed, the legislation would codify the rule. Lawmakers are worried that the Treasury Department's Office of Foreign Assets Control lacks the muscle to hunt down crypto criminals. A letter by Warren and 3 other Senate Democrats asks the Treasury Department to list ways it plans to counter sanctions evasions through crypto platforms, including how it plans to work with foreign governments. The senators also detailed the methods they suspect Russians are using to skirt sanctions, including using the dark web to move funds, ransomware attacks, and the Bank of Russia's new digital ruble. In the wake of 9/11, the passage of the Patriot Act required banks and financial institutions to adopt customer identification programs. Requiring banks to disclose suspicious transactions into private crypto wallets is not without precedent, even if it's disagreeable to some parties. The cryptocurrency industry, which largely views anonymity, or at least lack of government intervention, as one of its central tenets, understandably is less than enthusiastic. While Coinbase, Binance and Kraken are cooperating with government officials to make sure individuals targeted by sanctions aren't using their platforms, they have refused to ban Russian accounts altogether. Crypto platforms also argue that widespread Russian sanctions evasion simply isn't happening. One example, Coinbase recently announced that it blocked 25,000 crypto addresses it believed to belong to Russians engaging in illegal activity, but also added that it identified the majority of them before Russia's invasion of Ukraine. Furthermore, the Coinbase said it didn't notice a surge of new illicit activity following sanctions on Russia. Blockchain data platform Chainalysis noted a considerable tick in crypto transactions using the Russian ruble and the Ukrainian hryvnia in the last week of February, just as Russia advanced on Ukraine. Still, the platform was quick to point out that the surge in potentially illicit trading could also be due to average Ukrainian and Russians buying crypto in order to preserve their savings while both fiat currencies lose value. Soaring energy prices bring bad news for Bitcoin. Rising energy costs will probably lead to a consolidation within the Bitcoin mining community, the largest ETF operator focusing directly on the sector said. Josh Olszewicz, head of research at Valkyrie Funds, a Nashville, Tennessee-based investment firm in digital assets, told Bloomberg that it is going to hit the least efficient miners the hardest eventually. If the electricity cost keeps rising, that'd prevent them from mining with as much profitability, he said. Shares of the Valkyrie Bitcoin Miners ETF have slumped 19% over the past 3 trading sessions before rebounding on Tuesday. The fund, launched in February, rose about 4.8% to $22.23 at last check. Energy price hikes may have a bigger impact on the miners in Europe, Olszewicz said. The U.K. joined the U.S. to ban oil imports from Russia on Tuesday in response to the invasion of Ukraine. The break-even price for Bitcoin miners is far below the current market price, and most Bitcoin miners will still make a profit and survive the volatility in energy prices, Olswick said. As gold nears record, Bitcoin doesn't shine so brightly. Gold is suddenly attracting all the attention, with the yellow metal's price nearing a record of over $2,000 an ounce as the Russia-Ukraine war escalates. Now, crypto investors are asking what it might mean for Bitcoin, BTC. After all, the largest cryptocurrency by market value has been cast by some analysts in recent years as a potential rival to gold and its perceived status as a safe haven. The answer is that Bitcoin is still viewed as a technological innovation whose performance as a global macroeconomic asset is still in question. The uncertainty levels are off the scale at the moment, said Jason Dean, an analyst and advisor at Quantum Economics. The default setting is, go with what you know, which in this case means gold. Gold prices have climbed about 8% in the past 2 weeks, while Bitcoin has barely budged during Russia's invasion of Ukraine that developed into a full-scale war. Crude oil prices shot past $120 a barrel when U.S. President Joe Biden announced plans to join the UK in banning Russian imports of fossil fuels. Gasoline prices are jumping along with the price of commodities from nickel to palladium and wheat. Stocks have tumbled as risks mounted to the global economy. Everyone has been just jumping on the gold trade, said Edward Moya, senior market analyst with Owanda. Bitcoin is sitting this rally out. Assange DAO raised $56 million and quickly split up. Was it still a success? The WikiLeaks founder is still behind bars while the DAO works to release him by any means necessary. Someone recently told me that decentralized autonomous organizations, more commonly known as DAOs, have so far led to more philosophizing than building. At the most basic level, a DAO is just a way to organize people toward a collective aim. They're often called internet forums with a shared bank account, or quasi-corporations built on blockchains or governance structures for crypto projects. Some predict DAOs might evolve into a new type of public infrastructure, massive investment projects run neither by companies nor governments. Considering this wide range of activity, it seems appropriate to ask, when is a DAO successful and how do you measure that? The most notable DAO to date, Constitution DAO, failed in its aim to buy a copy of the U.S. Constitution, despite raising far more money than the document was worth. Spice DAO has also been stymied in its attempt to buy a Dune storybook and monetize it, last December, following a legal proceeding that opened the possibility for political activist Julian Assange to be extradited to the U.S. A collective called Assange DAO was founded. Its explicit aim was to free the dissident WikiLeaks founder, who spent several years locked up in Ecuador's embassy in London before being put behind bars in a UK prison. The DAO is taking something of a circuitous path towards freeing Assange. Last month it raised 17,422 Ether, about $56 million at the time, to bid on a non-fungible token, NFT, project that would then funnel funds towards charitable efforts supporting Assange's legal case and, unlikely, release, run by the Wow Holland Foundation. This is an important moment in DAO history, Rachel Rose O'Leary, a core contributor of Assange DAO, and CoinDesk writer, said at the time. The NFT project, called Censored, was created by influential conceptual artist Pac in collaboration with Assange and his family. The DAO bid on the collection's big-ticket item, a one-of-one NFT called Clock, which tracks the number of days Assange has spent in prison. In this limited ambition, Assange DAO was clearly effective. It raised a significant amount of capital to be put towards Assange's case. It drew support from a number of high-profile figures, including Ethereum creator Vitalik Buterin and Gnosis founder Martin Koppelman, as well as hundreds of small donors. Assange's fiancée, Stella Morris, and one-time collaborator, whistleblower Edward Snowden, showed their enthusiasm for the project. And, after all, the DAO did buy the NFT, achieving its goal. Bitcoin higher as U.S. ban on Russian oil imports roils markets. Crypto traders are still evaluating the potential impact of soaring oil prices on Bitcoin's price, if any. Bitcoin, BTC, was higher Tuesday as traditional markets including stocks and commodities swung wildly, with investors reacting to U.S. President Joe Biden's announced plan to join the UK in banning Russian imports of oil. The largest cryptocurrency by market capitalization was changing hands at $38,932 at press time, up 1.7% over the past 24 hours. Bitcoin ticked up slightly from early morning trading, which saw the cryptocurrency find support at the $38,400 price point. Bitcoin traders were monitoring the surge in oil prices along with the latest developments in Russia's war on Ukraine. Experts posit that the U.S. could turn to Venezuela or Saudi Arabia to alleviate soaring gasoline prices in light of the Russian oil ban. BTC managed to turn against the tide, winning back the initial failure, despite the decline in stock indices, said Alex Kupitsikovic, analyst at FX Pro based in the UK. Traditional markets posted modest gains Tuesday with the S&P 500 index notching a 0.44% gain. The Nasdaq Composite also trended upward, gaining 1%. Crude oil prices rose 5% Tuesday. Bitcoin analysts say that while the largest cryptocurrency by market value is often seen as a hedge against higher consumer prices, it's also often viewed by many investors as a volatile and risky asset with a price that might fall if the U.S. Federal Reserve moves aggressively to tackle inflation.